What's going on, guys? This is Trivon Thompson, the Crossfittin Realtor, and I've got a guest today, and we're going to be talking about the 9 steps for getting buyers the best deal in a down market. And I want to introduce Amber the Marché. Amber, tell us a little bit about yourself.
Yeah, so I work for Georgia Platinum Mortgage. We're based out of Kennesaw, Georgia, and we're a mortgage brokerage, which means we can shop with different lenders to get you the best price.
Awesome. Well, thank you for coming on today, and we appreciate it. Maybe we'll make this like a weekly thing.
Yeah, I would love that.
That'd be awesome, right?
Do that, yes.
Yeah. So due to the Fed's latest increases and the CPI coming out next week, we just wanted to talk about how we can maneuver you from like these higher interest rates and get you into your home in down markets based on the mortgage side of things and based on real estate negotiation side of things. And that's where we want to jump into today, right?
Yes. If you hear anyone talking about how they're ready to buy a house, but they're going to wait for the market to get better, there's really no reason to do that now because everyone has so many products. We can approve you and get you a good interest rate without having to wait for the market. So
absolutely. And then, you know, the famous saying, which I hate saying it, marry the house, date the rate.
Yes.
I hate it, but it's actually pretty accurate. I mean, if you can afford it, that is, and that's the only caveat. If you can afford these rates, by all means jump in because you're gonna have a better chance come later on. Like let's, for instance, say next spring when rates come crashing back down, so many more buyers are gonna jump into the market, but you already ahead of the game. You're in your house and all you gotta do is tap Amber on the shoulder and go, hey, let's refinance and get this thing going.
Absolutely. Yes. And they say time in the market is better than timing the market. So if you're waiting a year, that's appreciation that you're missing out on. And not to mention the principal payments that you're making versus a renting scenario where you're not gaining anything at all.
Absolutely. 100% interest on rent.
Yes.
Okay, so the very first thing that we want to talk about is your pre-approval. And Amber is going to jump right into that and talk about an underwritten pre-approval.
Yeah, so there are different ways to get pre-approved for a loan. You can really think about it like 3 levels. There's a pre-qualification where essentially you're just talking to your loan officer, telling them your information, and they say based on the information that you've given me, you could be pre-qualified for a home. And then you have a pre-approval where you get some of the financials, the loan officer takes your application, and we can give you a pre-approval letter. And then there is another level of pre-approval called underwritten pre-approval where we can take your application, get your financials, get you pre-approved, and then go ahead and submit everything to the underwriter. So up front, we're taking care of about 60% of the loan. It helps us make sure there are no bad surprises on the back end of the loan. And, you know, essentially all we're waiting for at that point is your title to clear, your appraisal to come back, and anything else.
So that's easy peasy.
Easy peasy.
Yeah, you do most of the heavy lifting up front. It's easier to move through the process.
Yes.
You already know that they're going to make it through the process.
Yes, absolutely. We can get you to closing much faster. So anytime you can get an underwritten pre-approval, which we do, it's better.
The second step to getting an advantage in a down market is where I come in. Now, I need to conduct a better buyer interview, right? Not just ask you for your location, your price, a mortgage, or if you're using cash, or bedrooms or bathrooms. I've got to figure out your lifestyle. You know, where do you work? Where do your kids go to school? What are your activities that you like to do after work or on the weekends? Where do you like to hang out? What parks are your favorite? You know, what restaurants do you frequent? Things like that. That way we can narrow down and hone in on the things that you're going to enjoy while living in that house and not just regret living in that house and being so far from everything that you like and so far from everything that you want to do. And yeah, that'll completely change your mind when it comes to buying in a down market because you have the advantage because there's less buyers in the pool. So you have time on your hands and you have the ability to think about where your house is going to be, right? Versus a few months ago, whenever you were buying a house $50K over ask, no matter what, because it was pretty, right? So
exactly.
Kind of crazy. And then the third thing is we're going to establish your search criteria. Buyers coming up in 2023, and even right now, we experienced a frenzy like we were just talking about. But now you're able to narrow down your search criteria, right? We can use the MLS. You can use apps from Keller Williams or Redfin. So we use the MLS, we use search portals, and then we can select the right properties for you to show you. For instance, if you're under FHA, right? Not all properties qualify for FHA. Not all properties qualify for VA. So the realtor is going to take a look at all of these things as we search through all the portals in the MLS to ensure that they match your criteria for whatever loan you're in or whatever choices that you've chosen to put into your new home.
Yeah, and as Trivon's lender, we have a tool that allows us to look at the value of the property and to see historically how it's appreciated and to see, a projection of how it's going to appreciate in the future. So when you're thinking about buying a home, but maybe it's not your forever home, we can help you determine what the resale value might be in the upcoming years if you're looking at potentially selling it later on in 3 to 5 years or whatever. So
yeah, and that's invaluable. Like, investors should be using stuff like that. And of course, buying a home is an investment in yourself. That's what I always say. So you are essentially an investor investing in yourself. So
yeah, I like that.
Yeah, so it's a great tool. All right, so in the next step, let's talk about your down payment, like how much you need for a down payment, et cetera, et cetera. Pass it off to you.
Yeah, so there's a big myth in real estate, and one of the biggest reasons why people think they can't qualify for a loan is because they don't have 20% to put down on a home. But it's actually not true that you need 20% every time. We have, like Trivon mentioned, the FHA loans that you can put down 3.5%. Or VA loans, if you're eligible for VA, you can get a home for $0 down. And there are USDA loans, which are bringing people to the rural parts of the state, which also only require $0 down. So there are different things that you can do. You don't always need 20% down to purchase a home.
Absolutely. That's totally right. And I hear it all the time. And I always introduce people to my mortgage broker right after they say that, because she's going to blow their mind and show them everything that you can do by not having that 20% down. Now, in the future, as your equity grows in your home and as your family grows, that equity is going to provide for possibly 20% down in the future.
Yes.
And then you qualify for better rates, right? Better payment, PMI falls off.
Yep.
Right. And so it's just a gateway to wealth. So you're literally investing in yourself.
Absolutely. And if you work with a mortgage broker like me, that's a big part of what I do is educate you on things like that. So maybe you're starting here now and you're putting 3.5% down, but in 3 to 5 years, you want to find something else. You want to upgrade. You plan to have more children, or you plan to live in a different area. So what are the things you can do for the next 3 years to improve your credit or keep your credit in a good place, and be able to have the money down to put on, 20% so you're not paying mortgage insurance the next time and have a lower payment. And also, if you get a large sum of cash, maybe it's an inheritance or just someone gifts it to you, you can actually use that as a down payment on a home.
Yeah.
So
it's pretty awesome.
Ask that for Christmas.
Yeah. Me wrapped up under a tree somewhere. All right. So next step, let's search for properties with a seller incentive. Now, there are two ways that can benefit you, right? The first one is covering your closing cost. And the second one is buying down your rate. And we'll expand on buying down your rate in a little bit, but covering your closing costs is massive, right? So it's not necessarily a big cash wad from the seller to you, but it's essentially what you would have brought to closing for the fees and taxes and all that stuff. Almost like it's being wiped out by the seller conceding some of their profits to your side of the transaction, right?
Yes. Yeah. It's really cool whenever you can get seller concessions, and maybe your closing costs are $5,000 and the seller says, I'll give you $5,000, maybe instead of paying it towards the closing cost, you do decide to pay for a lower interest rate. So yeah, there's lots of different things.
Yeah, lots of different things. And talk to a mortgage broker, and they'll get you all that information. The rabbit hole goes deep on that one. Okay, so next step, locate the best financing. And I want to kind of preface that by saying, let's stay away from all the online lenders, okay? There are so many hidden fees. They're not real people. You can't see them face to face if you have a problem. You can't bring them something. You can't pick up the phone and talk to them any time of the day you need something. You got to sit on hold for X amount of time. Like, you don't want to deal with something like that when you're making such a big purchase, right?
Definitely, yes. There's something about using someone that's local, that could meet you face to face if you needed it, that can talk over the phone. I have some borrowers that just want to text, but still being able to have someone that's available to you. You're not calling an 800 number. You don't have 10 different people sending you emails throughout the process. You get me, you get our processor, and we have a whole team. We're small.
And the other side of that is with a mortgage broker like Amber at Georgia Platinum, yeah, you're not beholden to one bank, right? Or one provider of financing, right? You guys have many different products.
Absolutely, yeah. So if one bank won't accept a situation for whatever reason, we can email or reach out to all of the other banks. And most of the time, somebody has a product that we can use. So, yeah.
And that's awesome. So many options. Just going to one person locally that you can talk to at any point of the day.
Yes.
Now, the very last thing we want to touch on is this trend, right? So we've got many different trends, and I'm going to mention it last, but you've got ARMs coming back. Some banks that even own the products are offering to come down to 4.25%. It's kind of crazy, right? But one of the biggest ones right now is a 2-1 buy down and a 3-2-1 buy down. And at that point, I'm gonna pass that over to you, because you guys have a 3-2-1 buy down that a lot of people haven't even touched yet.
Yeah, so a 2-1 buy down is essentially where the seller agrees to pay the difference of your mortgage payment for the next 2 years. So the first year, let's say you lock your loan and your interest rate is 6%. And you're doing a 2-1 buy down. So for the first year, your mortgage payment is going to reflect a 4% interest rate, so 2% lower. And then the next year, it's going to reflect a 5% interest rate, so 1% lower. And then for the remaining 28 years, if you did a 30-year loan term, you're going to pay the full 6%. So we have something called a 3-2-1 buy down, which is the same thing, except you have your first year, your points are at 3%. Your interest rate is at 3% if you locked it in at a 6% rate, and then it goes to 4 for the second year, 5 for the third year, and then for the 27 years after. So that's an amazing product, especially with the market right now, because even if in a year the rates are still kind of higher than you want them to be, just keep what you have. But you have essentially 3 years. And then when rates do come down, you can refinance. Right.
And that's the whole premise of the thing is, all right, we're going to give you this break here, right? Paid for by the seller. But as rates come down and it comes down to a comfortable point, you can refinance and lock exactly where you want to be for, the other, that's 29, 28, or 27 years. And it's a wonderful product. Paid for by the seller. Did I say that? Did I say that enough? Paid for by the seller. So jump on it. What are you waiting for? The time is now. Yes. Investors, buyers, if you're selling right now, you're serious. And if you're in the buyer pool right now, you're also serious. So let's do business together before it becomes a freaking frenzy like it was, 9 months ago. So
yes.
Yeah.
Come over to Georgia Platinum and we'll get you an underwritten pre-approval, and your offer will be even stronger.
Yeah, you hear that, guys? Strong offers. Yeah.
All the muscles.
All the muscles.
Yeah.
All right, cool. Well, thank you guys for joining us. Thank you, Amber, for joining me. This has been fun.
Me.
Absolutely.
Yes.
And we'll see you guys on the flip side. This is the Crossfittin Realtor, Trivon Thompson with Keller Williams, signing off with Amber DeMarche from Georgia Platinum Mortgage.
Bye.
Ta-ta.